Ladies and gentlemen, today we'll be presenting Fixed Income ETF by BA2424C. Meet our team. I am Nur Liana and Muhammad Ridwan, Nur Farhanis, Nur Rabiatul Raha, Nur Afiqah, Muhammad Hazim and Muhammad Syam.
What is the Exchange Traded Fund? Exchange Traded Fund are SEC registered investment organizations that allow investors to make their money into a fund that invests in stock, bond, other asset, or a combination of the asset in exchange for a profit. Unlike mutual fund, ETF do not sell or redeem individual share to individual investor. Besides that, ETF allow only authorized participants to buy and sell share directly. Now we are focusing on fixed income ETF. Fixed income ETF are bond funds whose shares are traded on a stock exchange throughout the day. Furthermore, fixed income ETF are made up of three important participants, each of whom has a specific role to play, such as the construction of the index, the establishment of the ETF, and the creation and destruction ETF share. The first exchange traded fund in Malaysia is ABF Malaysia Bond Index Fund. This is bond ETF designed for investors who want to diversify their portfolio with fixed income while maintaining a lower risk profile.
Next, one of the pros of fixed income ETF is that it's easy to invest in bond because it lets investors track how the value of a whole basket of bond security changes. Fixed income ETF are bought and sold on exchange and their prices are transparent. Investors can purchase and sell a share just like they would with a single stock. Second, fixed income ETF are more liquid than individual fixed income security. It is trade like stock which offer great liquidity to investors. Authorized participant AP will ensure liquidity and make sure shares are traded in regulated manner. Third, there is no maturity date. The maturity is based on the weighted average of all the bonds in portfolio. To keep the portfolio level maturity, more bonds are always being bought and sold. Lastly, it more frequent income because it gives investors a steady stream of money that they can use however they want or put back into their business. Most of fixed income ETF pay interest every month instead of every 6 months like US Treasury.
There are several cons of investing in fixed income ETF, including default payment and credit, where if a company underperforms, its secondary market bonds may drop. An investor may get less than face value for a failing company's bond. Other than that, interest rate. These risks occur in a scenario when market interest rates are rising and the bond rate is falling behind. The bond will lose value in the secondary bond market in this situation. Finally, inflation. The return on fixed income investment will decrease if there is an increase in price or inflation.
There are a few types of ETF which are equity ETF, commodity ETF, and fixed income ETF. First is equity ETF. Equity exchange trade funds are fundamental investment options that combine the flexibility of stock investing with the simplicity of equity mutual funds. Next is commodity ETF. Commodity ETF are exchange trade funds that invest in physical commodities such as agricultural goods, natural resources, and precious metals. Lastly, fixed income ETF. Fixed income exchange trade funds are a type of mutual fund that trade on major stock exchange and is designed to track the performance of a certain bond market index. ETF like bond market index are created and maintained by financial institutions, albeit not usually by the same one that create and manage the index on which they are based. Although equity-based ETF are the most common, some of these firms are also offer fixed income ETF.
Now, we will look at the valuation of fixed income exchange traded funds. The easiest way to determine the value of an ETF is by looking at its net asset value. The net asset value shows how much is the value of all the securities included in the fixed income fund is worth for at a particular time. It can be calculated by firstly subtracting liabilities from assets. Then, we divide it with the total number of shares outstanding. In the case of ABF Malaysia Bond Index Fund, which is the only fixed income ETF listed on Bursa Malaysia, we can calculate the NAV at 31st December 2021 by taking the total asset from the year 2021 minus with the total liabilities on the same year. Then, we divide it with units in circulation for the year 2021. Therefore, we will get the NAV of 1 ringgit 18 cents per unit. Since there is no other company that offers fixed income ETF in Bursa Malaysia, we can evaluate its performance by comparing it to the NAV of the year before. We can see that there is a 6 cents drop in value in the year 2021.
Do ETF trader does affect the market volatility? ETFs traded by informal traders have a bigger impact on the financial market and play a part in the price discovery rather than contributing to a market noise or volatility over the long term. Also, ETF inflow and outflow have a positive impact on the volatility of bond return. High-yield bonds have a 4 times the effect of an investment-grade bond. Next, ETF can help make market more efficiency provided if they are constructed properly. The overall amount of market risk is independent of the number of ETF that exist. Through design decisions such as index weight and primary market liquidity, ETF issuer can affect the overall riskiness of the market. Index design decisions involving stock selection procedure, weighting and other can also impact ETF market efficiency. Lastly, in the liquidity risk in ETF, trader held in underlying security may disrupt the liquidity of ETF. Operational flow at market maker may result in a temporary decline in ETF liquidity. Other than that, in all market conditions, investors face the risk that liquidity of derivatives may not exceed the liquidity of the underlying security.
That's all from us. Thank you for listening.